Hello. No. Ah. Hello. Okay, it's getting the signal. Okay. Come on. All right. Hello. Okay, I guess this will be it. Um, okay. And all right. Um, take some time. Sorry for the bumpiness in the beginning. Because I'm trying to do the Zoom based lecture. Okay. Using my computer. So setting up together with it is kind of a hassle a little bit. Make sure things are working correctly. And all right. So last time, I hope you can download the class note 2 again on your computer with a different name, but there because there was some kind of an update like this. Okay, class note 2 or chapter 2 class note, right? Please download that part. And then for your homework, please turn it in. Right. And okay. Okay. And we have chapter one mini case. Which team are you? Please raise your hand. Okay. Um, and try to sit in front. Don't go too far away. Okay. Please, one at least one row or two rows. Um, get together. Yeah. So the Beanie case presentation, I'm gonna give it to give the microphone little later, like in 5 minutes. So get ready. And before we begin, right? Oh, excuse me. The class the schedule, right? Class schedule. Oh, team number 4, or was it team number 1 that did not submit your preference for one team have not submitted about your preferred schedule of presentation, mini case. So please send it to me as soon as possible. And then current issue, so far nobody was volunteering for that, so it's up to you. Next week we want to do it, right? If you are too shy to raise your hand, please volunteer for that by, I don't know, on the chatting window or Kakao Talk, right? Hopefully that current issue presentation will not overlap with your mini case presentation, okay? So non-overlapping ways, please check it out. And one thing I strongly recommend you to, what is it? The build your profile or build your page on LinkedIn, because this is the time when the global banks and then the what is it? Consulting companies or whatever companies you're interested in, they post their, how do you say, internship opportunity openings, job openings for either internships or permanent position, okay, right now. And then it just goes like 1 week or 2 weeks. It just doesn't last forever, okay? And that internship is for next year summer. It's not like the internship for the winter, please, and then apply for it. No, it's too late. It's too late. They're already done, okay? And they open this kind of opportunities using long window. How do you, not long window, but the slow moving, okay? So that for the next summer internship, you have to apply right now, okay? And you will say, my resume is not ready. And then I don't have a cover letter. And that is why I have been telling you, right? You have to prepare for the resume long before, okay, even in your first year or second year, right? And then have your feedback from your friends. You have friends and neighbors and your teammates or whatever, right? Get some feedback as soon as possible. Help each other out to, polish your resumes, okay? So submit them. And then at least yesterday I saw an opening from Bank of America Seoul branch for what is it? Trading desk job. Okay. So traders kind of positions, if you're interested, go ahead and click the pages of Bank of America, and then those banks, they have not only LinkedIn page, but also they have recruiting pages there, so that they will give you some. If you click on their feed, okay, they will notify you, so that whenever they have openings, you can apply for this position. Of course, the competition is like 99, 1 out of 99, or even worse. But thinking about your chance of getting jobs in Kexim Bank, right? Kexim Bank, what is that? Or KDB, Korea Development Bank. Are you sure you're gonna get a job in that? Go through that competition rate? It's also one out of 100 or something. Anyway, okay. Competition rate is the same, almost the same anyway. So go ahead and do it. For exchange students, you may be wondering, can I get some internship in Korea? I don't know. I don't know. Some exchange students show their interest in that. But it really depends on the legal, I don't know, the visa status and then the agreements that you have from your country to Korea. So we don't know. You could try and see if things work out. Yeah, yeah. So that's the thing. And LinkedIn page, please build up something there and then connect to me and everybody that you are interested in. Okay. Don't wait for me to ask you, right? And it's like you may feel like, oh, what if Andy doesn't accept me? And what a shame if he says no to me. Well, put yourself in the shoes of myself, right? What if I ask you to connect and then you say no to me, right? So that's even worse, right? So it's much better for you to just start and proactively connect to the ones that you're interested in, professors or any professionals in the field, right? Go ahead. And how do you say? The Korean students may feel very shy to build up this page because it's not simply their culture. That's, I don't want to show off myself. I have to be polite and I have to be more, how do you say, reserved. But things are changing. You're MZ generation MZ, you guys say yourself, right? Don't behave like Generation X, like myself. My generation is like really, really shy. Okay, have to be more polite. No, never show off, right? We have to be Asian there. But in your generation, it's much more outgoing and more proactive yourself. Okay, that's what we feel, and you're naturally more open, right? So show yourself, swag, fine, that's good. I have nothing to show. It's okay. Simply your status as a student at SKKU, that's great enough. Okay. So, and then some extra work experience, you can post it, right? That's also great. Yeah. Nobody says that I'm going to kill you if you post your work experience here and there, right? Nobody says that they're going to kill you. Okay. So just show it there. Yeah, as a reasonable way of communicating with them, so that they will know that you exist over here and you are interested in their jobs, right? That's the thing. So far, very few students have connected to me. It's very interesting. But that's that. And having said that, class schedule that I showed in the table, it's very ambitious one. Okay, the table week 1, week 2, week 3, da, 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 da. Are we going to go through that chapters 100%? No, the answer is no. Very ambitious ones. So we may go a little bit slower than that. Okay, so I have to manage your expectation. And that is even better for you because less of a work, isn't it? I don't know. Yeah. And then the final week, I want to ask your preference. Okay. I don't know whether I would be able to obtain or secure a guest lecture from the industry, but if I am lucky, okay, which one would you prefer? Which kind of person would you prefer? Junior guys like age difference with you within 10 years, right? Like the guys in like a 20s or 30s in the foreign bank, okay, perhaps in Korea, or senior guys in foreign banks or global banks, like my age or younger than or older than me, like in the age of 50s and 60s or something. Which one? Younger guys, please raise your hand. I would prefer to see younger guys in foreign banks. In by the way, younger guys graduated from SKKU, your alumni. Younger alumni, please raise your hand. The other is like older guys, not necessarily SKKU graduate. Please, the younger guys, SKKU, please raise your hand. Okay. Older guys, non-SKKU possibly. One. And then doesn't matter, indifferent. I guess you are, right? Okay, fine. I'll keep that in mind for your preference. Okay. No guarantee. No guarantee, by the way. We may end up with me talking all the way down, unfortunately for you, but let's see. Okay. Um, yeah, yeah. So LinkedIn, this is a time. Time flies like crazy. Yes. And um, all right. So team number, what is it? 5? 7? Great. Please come up to the podium and then present your mini case here. And you can use this microphone. Yeah. This for presentation. Excuse me. All right. I forgot to um share my screen over here. And- Right. Well done. Um, Likewise, the case questions are there, and then you can address those things. That's good. I or the students can ask any questions related to it, and part of it could be related to whatever you saw in the newspaper. Okay, most recent one. Partly because I will ask these questions in your midterm and final exams anyway, right? Um, it's kind of evolving. My questions evolve. I will try to, incorporate this kind of things. So that's why. And also, it also helps in your job market too, because those guys in the industry, when they are interviewing you, they will ask these questions anyway. You saw the Pakistani issue and the flood going on, and what would you say? And you will be embarrassed. I don't know what the hell. And then you will be like, yeah. So get ready for that. Anyway, so the next thing, yeah. Right here. But yeah, la. Yeah, okay. Bimetallism. So chapter 1 and 2, it's kind of a lot of it seems to overlap. But in chapter 1 was more about globalization and then giving some big pictures, the waves of globalization over human history, I guess, setting the stage, right? And now we are facing some kind of reshoring issues, right? Um, and then it is non-trivial, right? And then if you look at these international conflicts, things are getting out of our control. Okay. It seems like during the, I mean, after 1945, and then until maybe 2000 or something, 2010, we were living in relatively very peaceful period for Western world, right? Maybe some other part of the world, Afghanistan, they had a different story. But for Western capitalist countries, it was maybe the heyday, okay, longest period of heydays. That turns out to be coincidental with Queen Elizabeth's reign. She died, passed away, right? May she rest in peace. But happened to be that way, right? And a new generation is coming, right? What are we going to have, right? We don't know. And then all kinds of dismantling is happening. And then Ukraine, Russia, and then all these strong men, strong women conflicts are going on. And adding salt to the injuries, our good old friend North Korea is starting to claim that they have the freedom to use their own nuclear weapon whenever they feel they are threatened. Quite expected, but not this fast. Okay, not this fast. Kind of spooky. Of course, I told you before they are not going to kill us because we are the goose that lays the golden egg. They don't. We are just a hostage. They cannot kill us. But you never know. Okay, you never know. A little bit of thrill is going there, right? The chapter 2 is more about monetary system based on this globalization or waves, right? Especially on the last stage. But to talk about that, why do we need that monetary system? Because it's about international finance, about FX, right? The international trade and international business, you want, I mean, you avoid those FX risk, okay? Foreign exchange creates another important risk in your business. How can we get away from that is an issue. To get away from that, you want some fixed exchange rate. Ideally, you wish, but only in your wildest dreams, or maybe not. For a certain period of time, we had some fixed exchange regimes. Um, But then we feel that, oh, there's a reality that you have to meet. Okay. A certain period of time you can do it, but not forever. Okay. And you're going to see the ideas about the Triffin's dilemma. And then that was the point about how the Bretton Woods system broke down in 1970. And then another trilemma, okay, another thing called a trilemma will be shown over there, where you see, uh, having your fiscal independence, independent monetary system, monetary authority, right? Policies in your country and fixed exchange rates. And then the other things, three things about fixed trades, stable tradings, all this kind of thing having together never happens. That kind of things. And chapter 2 is more about this kind of FX risk related issues in globalization. Okay. So let's see. Chapter 3 will be, if we have time today, right? We might cover chapter 3 a little bit. But that is more going into balance of payment. Okay, what creates this kind of FX rate changes? It goes down to your balance of payment deficits or surpluses. Whether you are in your country is in the deficit or in the surplus, right? Depending on those situations, your currency strength differs, right? Changes. So that's going to be an interesting part, getting into the core, right? Now, so the monetary system, right? The currency wise, in a long time ago, right? Bimetallism was there. Yeah, some countries were focused more on gold. Some countries were focused more on silver as a means of exchanges in the market, right? I told you before, China was based more on silver, whereas British system, they were more focused on gold. Okay. Some European countries used both, bimetallism, gold versus silver. Which one would you use? Gresham's law. Whichever that is seems worthless to you. Okay. The more precious of my precious. If silver is more precious relative to gold, you want to keep that silver in your pocket and then never use it for your currency, right? Let the gold get traded. Okay. Vice versa. My precious. That's the idea of Gresham's law. It's kind of a bad money crowds out the pushing out the good money. That idea. Yeah. And then okay. So okay. That was this bimetallism, Gresham's law, right? Yeah. And then yeah, FX risk. Here, I just brought some interesting question to you. It's related to chapter 1, actually. This is not in your, this is just what I stuck in today. So download those things, that file in your computer and look at it. You see, suppose you bought Tesla, TSLA, okay? Raise your hand if you bought Tesla before. Anytime in your life, at least once, I held that stock in my life, please. Just one, two, anybody else? No? Okay. Yeah, okay, fine. Have some more fun, I guess, in your US stock market. Is it a good time to buy or sell in the US stock market? What do you think? What do you think? Sell? Sell? Hold? Hold? What do you think? US market. The other day, like the day before or yesterday or the day before, the NASDAQ index plunged by 5%. Holy cow. It's like back to 2020 or something. Is it a good time to hold or is it a good time to buy or sell? What do you want? What do you like? So you said hold. Buy. Why buy? You're a risk seeker? Asking for trouble? No, come on. It's all right. I like to tease it. It will bounce back eventually. Okay, cool. Any other opinions? Yes. Buy low and sell high. So buy more and more and get into deeper trouble. It will rise again. The world will not finish. Okay, it's not the Armageddon. Okay, so you're the courageous one. Any other opinions? What, I mean, last time in 2020, it skyrocketed back again immediately. Why? Why were they able to do that? In 2009, it did it again, like skyrocket like crazy. 40% plus or 30% plus on average for the whole country in the United States, right? Hey, why were they able to do that? Crashed too much, so it was dipping up. Any other thoughts, right? You're right. I agree with you, right? Quantitative easing. Right. So quantitative easing, tell me more about it. What is that? I mean, the way you understand it. Mm-hmm. Money flow, right? Money supply, they increase it by printing more money, creating hyperinflation. No? Right. Buying more government bonds, kind of things, right? Me pushing more money into the market. It's like a helicopter money, right? They're throwing out the money for you. Why? Because boost of the economy that was screwed up by the virus or maybe the crash crisis in the system. So they were able to do it. They had deep pocket, by the way, first of all. They were able to do it. Now, is it the same situation if you look at the government deficit or budget kind of situation? How much ammunition do they have? Do we know? Any ideas? Right? Can they do it again? Quantitative easing, season number 3, season 4, season N? Uh-huh. Okay. Okay. Now, if they try to do quantitative easing, this time again, what will be a problem? What could be a problem, unlike last time? Huh? Hyperinflation? Inflation, isn't it the thing that we are afraid of right now? Given that, can we do the quantitative easing one more time? Yeah, well, someday, hopefully, maybe. And hope and pray this time. This time again. And then we just buy it. Oh, yeah, it's going down. Let's just buy it. Right? Um, so people are waiting for that kind of opportunities, I guess. Not just myself, right? My genius friend, God. Um, he did his business for movie production. After quitting his job in Goldman Sachs Hong Kong, and after MBA, and then he was doing in movie production in India, even though he's a Korean guy. And why India? Because not many people are doing that between Korea and India, and he's Korean one. And then it's luckily the K-pop and K-movie started to pick up like 10 years ago. And then now you see 오징어 game kind of things, right? Squid Game got Emmy Award kind of things. But he invested himself into the India business when nobody was doing that, almost, right? And then last year, December, I met him. And then he said he sold his company to Kakao for about 300억 won. Whereas he only invested 30억 won. 300억 won is like what? um, 300억, $30 million equivalent. He sold it to the company, whereas his investment was only 1/10 of it, okay, over his 10-year period. Why did Kakao buy his company? Because it was unique, not it was the only one connecting Korea and India, and then content business, right? That gives a lot of intuition for you guys, right? That is, you have to go for something that is nobody's doing that, right? Very courageous you need to do. Number two, he cashed out everything last year, feeling that something big is coming, something big crash is coming, right? God, so I was like, yeah, you are faster than all these kind of things is doing a business, natural instinct, right? Somehow got trained, right? He was doing, he did his finance, right, training before, so realizing those things was very interesting. I was late, right, in that sense. Only I cashed halfway until now, and then I'm still waiting for that crash to happen. Just to buy it. When would it be? I don't know. I don't know. So here's the thing: foreign exchange risk. Okay, suppose you bought Tesla last year, October 31st. Okay, October 31st, which is $407 per share. Tesla. You bought it at the peak, never knowing that it's gonna be the peak, and then like going down like together, right? So now you are here. If you look at this gain loss, right? Then how much must have been the cap gains? Well, now it is $302, right? So if you do the math, you will find out that you lost 25% about, right? 1/4 of your money gone in the Tesla if you do it in the US dollar terms. But if you are a Korean investor, right? Originally started with Korean currency, how much would you have lost it, excluding those FX transaction costs, right? Forget about FX converting money, the fees, right? But you started with Korean money and then did this investment. How much would you have lost? Would it be 25% or um, less than that? The thing is, foreign exchange rate changed from 1180 Korean won to US dollar to 1393 or no, 1394-ish, right? Until today. So over that period, how much would you have gained as a Korean investor? Please, and then do your numbers and then tell me about it. Would it be 25% or something? Minus 25%? Would it be worse than like minus 30%, 40% ish? Or would it be like minus 10% ish? Or plus 25? Which one? Tell me the numbers, please. If it is not for your own account, it could be for your parents' account. You are helping your parents somehow, right? Calculating it. All right. So nicer. It will be nicer if you try it with more accurate numbers over here. Then, maybe so that you could get some more detailed number, 2 digits below decimal point in your percentage figure. Okay. So maybe some more numbers, a little bit. Okay. I don't mean that you should write down all the 10 digits below the decimal points, right? But decimal point, 2 or 3 digits below, you want to clarify it. Okay? Make it your habit. Good. Anyway, minus the 12.5%, right? So you don't have to worry about it that much if you are investing in US stock market, given that your money is in there, right? That's the thing. 12.5% as opposed to 25. It's like half, right? Half the loss is gone. Because of the currency depreciation in Korea. Yeah. Okay. Then the next question becomes like, are we headed into another financial crisis? What do you think? What do you think? I think it will be interesting to have some polls or your opinions in the 카톡방, maybe every week or maybe every day. So what do you expect as the currency rate going into like at the end of the semester, right? At the end of the semester, what do you think is the FX rate of US dollar Korean won, right? Like that. And see how the average of your expectation changes over week, right? What do you see? Where would it go? Please tell me, anybody. If you look at this FX graph, look at it. The numbers are very slow, they're very small, but okay. Now you see it. Please. Oh no, I made a mistake. Oh yeah, that's great. Thank you. So over the history of Korea, this is today over here. And it's starting from 1980, okay? And when I was a small child. And then this is the period time of financial crisis in East Asia, which we'll cover in chapter 2, right? 2000, I remember. That was your baby time, I guess. Or you're not even born, maybe. But like so many people got screwed up over here. And then in global financial crisis, right? And now, are we headed to another one? Any thoughts, please? Are we going to have a crisis? What's your expected foreign current FX rate at the end of this semester? Huh? 1400. 1400. Anybody agree? 1400? At least we will hit 1400. It's already 1400, by the way. It's 1394. It will stay there? Okay. Any other thoughts? Any other opinions? Where would it go? 1600? Why? Right? Oh, 12 years. Wait, you're genius, man. So, wait. So it's like a 12 years or more, 13 years, right? And that is what? About, is it 12 years? Okay. Every 12 years, are we going to have some crisis? 자축인요 신사오미 신유술래. It's like a 12-year kanji. You the Western or European guys, you have the horoscope in the sky, right? Is it horoscope? Yeah. In Asian horoscope, 12 things are there. Mouse and then things like that. 자축인묘. Every 12 years we're going to have crisis. Is that right? Good idea. I never thought about that. You're a genius. What's your name? Iwonjun. Yeah. Any other thoughts, please? Any other thoughts? And then, moreover, you are saying that 1600. Why 1600? 12 years? I never thought about that. But this one, why do you think 1600? Uh-huh. Why should it be again this? Why should it be? Past experience, past peak, previous high, okay, previous high. You're anchored on this number. In behavioral finance, we say people are anchored on previous high numbers, like 52 weeks high in the stock prices and things like that. You're anchored on it. You're irrationally believing that. Okay, you are irrationally believing that. Then should it happen that way? If we are rational, right? If we are rational, should it happen? And the answer is no. Given that foreign exchange market, everybody is trading and big fish are trading like that, shouldn't it be more rational than that? We may wonder, right? But behavioral finance perspective, you say, we are anchored on it. We're going to go there. Hit it, baby. Going there, right? Okay, fine. What about next idea? 1600, right? What determines the FX rate, foreign exchange rate? What determines it? So anchoring could be one behavioral perspective. Behavioral means like temporarily we may hit it, baby, and then come back again. Okay, does not sustain like this. This is more like rational equilibrium level, we would say, equilibrium level, economically justified. So my question becomes, what determines this equilibrium level of FX, the foreign exchange rate? Okay, a textbook determinant of foreign exchange rate. What determines it is a more important question. Okay, so what could it be? Interest rate of two different countries. So good. Let me list up these things, right? Interest rate of US, Korea. So what's the idea? You said interest rate, so you finish it. The Fed is increasing the rate. Okay. Okay. Good. So interest rate wise, right now, Fed funds target rate, how much is that? Do you know by any chance? I don't, roughly what is it? Like 3.5% or something? Thank you. And Korean rate is what? 2.5, you said. Both of them 2.5. Good. Right. Thank you. So 2.5, 2.5. They are the same. Isn't it happy time? We are the same rate as US. Korea is having the same rate as the US. Isn't it great? Korea has grown and grown like a stronger. Isn't it time to celebrate and party, man? What do you think? What do you think? Why do we have to have a higher rate? Isn't it privileged to have the same rate as the United States? To attract investors? Tell me more in terms of economic terms. Tell me like an economist. Impress me. Impress your boss with economic jargons. Yeah. Has more systemic risk than the US. Riskier. Thank you. Yeah. So you need a risk premium on that, right? The US has almost no default risk because it's their money. Printing our US dollar. Yeah, if you dream about the situation, the Korea prints our own money and then the rest of the world has to accept Korean won. Do we have to worry about our own default? No, right? But the US has the privilege as the, how do you say, the base currency, so that they print it and they have no default risk, and their financial institutions are strong, anything, and the corporations are strong. Whereas in Korea, it's not that much, right? And it's not our own money. There is an FX risk, and we may not repay the US dollar debt. So there's a risk. And still we have the same rate. Something must be wrong, right? We need a higher rate to keep those money somehow inside, right? Otherwise, US dollar will get more expensive, Korean won depreciating more. That's one factor. Are we going to talk about that in the IRS, not the IRS, but the interest rate parity, which turns out to be CFA favorite question, FAQs, right? Any other determinants about the foreign exchange rate over here? Any other? The interest rate, that was the important point, by the way. Any other thoughts? What determines FX rate? What determines FX rate? Politics. Please tell me more. What politics? Politics, the capital flow control, so that some countries may say, don't move the money out of our territory, and then that kind of restriction policies could be one factor. Could be one factor. Policy, FX related policies, restrictions, could be. Okay. One, maybe two. Any other thoughts? You raised your hand. What's your name? Sanctions. Right. Your asset is frozen. Like okay. North Korea or Iranian banks, they cannot move. Right. Any other thoughts? What determines FX foreign exchange rate? The interest rate, okay, it is also related to this one too. One of the systemic risk or those factors. What determines it? It has something to do with the, what is it? If anybody looks at the FX chart and then worry about it, and your parents, your mommy ask you about it, you learned international finance. Hey, your name is 현석. 현석아, you're learning international finance from Andy Kim, right? And then the rate is going up like crazy. What do you foresee? And then what would you answer? Other than this one, interest rate, other than that, she knows that. And what other things? Or he knows it, your daddy. What else would you say? So sorry. Uh-huh. Export of Korea will be increasing because our products or the semiconductor of Samsung gets cheaper, which is already cheap. But because it's even worse, isn't it bad? Price is cheaper, isn't it bad? You say what? Why? Why export increases? Because of the price competitiveness, right? So price gets more competitive, we will sell more, so more export, we could do it. Good. So export, you touched on a good issue. Export and then import decreases over time. So what? That means export increases, then Korean won will over time in the future. Korean won will what? Appreciate, appreciate, right? So that it will come down later. And that's what we call the J curve effect in chapter 3. Okay? So the FX flexible exchange rate, let the market move around and party somewhat. Sometimes you screw up yourself, but that's not the whole story because you get more exports going on. Okay? That's the chapter 3 issue. Great. What else do we have? Import and export. Net export matters too, right? And then whenever we see this chart, right? Behaviorally, number one thing is as what you said, previous high point. Okay. Immediately in the short run, people get crazy. The market psychology will drive it. Oh my God, what's the one for previous peak, right? They will pay attention to that. But in the long run, this economics will drive it. And the thing is, couple of more things I want to highlight is this one. Typically, something called the foreign reserve of each country is a critical issue. Foreign reserve is accumulation as a kind of the way I understand it is kind of an accumulation of what happened in export and import over time so that you can keep your foreign currency in your vault to get ready for bad times. Okay, this is kind of potential financial crisis. If you look at 1997, that's this time, Korea's foreign reserve was this small. Okay, of course, the economy was small, but even worse than that. So that we ran out of US dollars to repay our dollar debt, which means bankruptcy. We were almost defaulted. And then we had to be bailed out by IMF, right? That's chapter 2. You're going to see that. And over here, we're getting worse like this, right? 12 years. Thank you. And I have to tell, hello, shows again. Hello, is it? What are we going to have, right? Here, we did not have official financial crisis, and we did not have to go to the IMF, thankfully, because we had enough of reserves before. Okay? Cushion, I would say cushion, enough of a cushion. How about this? Okay? So this gives us some kind of an idea. Oh, okay. Okay, do we have to freak out? Okay. And that's, I didn't say anything. Just see it, and then you feel a little bit about, okay, get a sense of that. Another part of it is net export. You talk about the net import and export. In terms of pure dollar amount, okay, pure dollar amount. This is the net export of Korea over our history ever since 1980. If you look at it, we can be frightened. We are in the historically lowest point. Net import, okay? Isn't it a situation that we should be freaked out? And then we're going to have another crisis. Hello, 12 years, right? Isn't it? But we don't know because the whole size of the economy, like import amount and export amount, if you draw it, okay, the Korea economic size has increased so much so that the gap over here looked that big. And as it turns out, we have this big of economic activity anyways. So is it really a time to freak out? And then we'll reach that 1600 level or 2000. I don't know. Another thing we have to look at, maybe what? Is it Korea only that is having this kind of depreciation? Our close neighbor, our close rival all the time, what country is it? In the football games or soccer games, we can lose any games in the whole world. Like Spain or Brazil, Korea, we can lose it. Or Germany, right? Or Netherlands. Okay, we can lose it. But for this specific country, you are not supposed to lose it. What country is that? Thank you, Japan, right? So if you look at Japan's FX rate, what's happening? I don't have a picture over here. Perhaps you could talk about it in the next week's current issue. Okay, anybody volunteer, go ahead and do it. And compare to Japan, or maybe Japan is too big. I mean, let's recognize it, okay? I mean, the economic size, that they've been big. But if you look at other countries' FX rates overall, okay, relative to US, and then compare it with Korea's FX rate, okay, how are we doing in a relative sense? We have to compare those in a comprehensive manner. So that's the thing I wanted to talk about, okay, before going deeper into chapter 2. Okay, questions, anything, right? Great idea, by the way, 12 years. I mean, I'm not kidding. There is a in financial economics research group, okay? Finance is a huge area, corporate finance and then investment split. But another way of splitting it is like a financial institution and studies, right? 금융기관론, like financial institution studies. They say every 10 years we have a heyday, every 10 years, because those crises happen every 10 years, and then they look for us, financial institution specializers, right? Currency crisis or banking crisis happens every 10 years. And you found out this is 12 years instead of 10. Thank you. I have to tell them, right? It's not 10 years. Look at it. At least, I mean, it is, if it is not Korea that may suffer next financial crisis, maybe other countries, emerging market, it's non-trivial issue, okay? How can they repay their US dollar denominated debt? That's a big issue, okay? And given that those emerging market countries suffer, how safe would Korea be, or your own countries be? And then international money flows, how they will flow. We have to think about it comprehensively. Anyway, that's that. Shall we take a break about 10 minutes and come back? Already 1.5 hours passed. So I will come back at 7:35. Thank you. then, okay. Ba-ba-ba. So last hour I told you more about, told you with more about graphs, right? Data. Uh, but it's just the graph is a small part of visualizing the data. Okay, now it's a generation of data, big data, and data is here for you, right? Then where do we get that macro data, FX rate, and then foreign reserves, right? Um, well, for in general, you can go to World Bank, the World Bank or IMF database. You can Google search it in your internet and then scrape it somehow. If you are good at Python, that's where you can just apply and then scrape everything and then tabulate yourself. Okay, maybe you could do it for your real-time updating. Okay, you can do it automatically. Okay. Um, for Korean students, I would like to guide you to, lead you to this data guide, which the school paid for this, and then it is available for you, data guide. And there, if you install it in your computer, you can run it and then download those data real time, okay, every day update it, and then Excel pops up automatically like this. The thing is, it had the data labels, the variable names are in Korean language only. So I'm sorry to foreign students. Okay, just bear with me a little bit. One alternative is you can learn Korean. You can torture your teammates and say, "What is what is this in English? Please translate it." You can say that, but for Korean students, I would say here's one point I would like to ask. Right, the data guide actually started from Samsung FN, and I believe they want to become more global than they are right now. They want to serve global citizens, global investors more than this. What am I trying to do here? It's kind of slow. But all that I'm trying to say is maybe you could try to translate those data items, variable names, right? And translate it into English. And I don't know. I mean, nobody seemed to have tried it before. But that may help. I mean, when you have a job interview with this FN guide, okay, data provider, and then for internship or permanent position, talk to them. Talk to them. Here is my list of variable names translated into English or German or other languages, Thai, right? Or other, Malay language or Chinese, so that you can globalize your company this way. Hire me, man. That's one way you could convince. Uh, you know, that's one idea I have in my mind. Um, Maybe I'm dreaming too much, but that's the thing. Over here, you can download and specify those items like this and play your way out. All the stock market, stock return data, and indices, and then derivatives, and then FX related data are here, easily available for you. Okay. Nowadays we don't go to Bloomberg terminal. Bloomberg too expensive. Okay, it's fancy, but you can do the same with data guide anyway, and then you can do the data scraping yourself, right? So that's one thing I have in your mind. Number two, some of you may wonder, how do I write resumes, right? English-based resumes. I have my now if you Google search me, um, don't click on this other professors. This is Kim Andrea. I don't know why I have so many synonym named professors inside SKKU. One, Kim Andrea 교수님, I like him. The other, he's a strategy or HR. 김영환 교수님 in economics department. Not me, right? But me is over here, okay? And then here, yeah, my research crews, yes. I don't know if you are aware of these guys, but if you click any of them, okay, their names, you will be able to see their English-based resumes that I coached, okay, so that which items to go first, which items down, and then what to highlight and what not, okay, things like that. So you can refer to this and then mimic yourself somehow, okay? Uh, telling about yourselves. By the way, this guy, I'm proud that he is now working for Sampro TV. Sampro, have I shown you this guy before? Yeah, okay. And then now he's learning a lot of economics in his internship job. Okay, isn't Sampro TV a journalist company? No, yeah, it is. But it gives you a lot of opportunities to, you know, work with economics data, FX related ones, and whatever. So refer to that one and then polish your resume. Now, getting back, yeah, gold standard, right? The currency system, right? The European system, at least, right? In Britain, they switched it to gold standard. Okay, bring your money, and then the central bank will, change it into gold, right? With that, redeem it into gold. That was the idea. Which means they had a lot of gold in their reserves, right? Instead of silver. Why? Because they spent so much silver in doing something else. Yeah, and then until World War One, okay, they were doing it, and then Great Britain, right? Um, Especially in Queen Victoria's era, they were the superpower in 19th century Europe, and then they were the earliest to experience the Industrial Revolution, and they had the experience the mass production of woolen clothes and exporting those cheap clothes into continental Europe. Trade imbalance happened a lot, and they imported so much tea. Okay, they exported so much to Europe, but they imported so much tea and spices from China and Asia. By that, they had to use a lot of silver. Okay, um, they could not force the Chinese to use gold, right? I don't know why, but they were just going there and spent all their silvers since 17th century, up to the point of running out of silvers, right? Almost. So what do? Gold is available to spend as money, right? Medium of exchange, right? Gold standard took place eventually, and then many other countries followed the suit. Okay, and then right, classical gold standard. Here's an example. Well, two different countries, right? Suppose the pound in Britain is pegged to gold at 6 pounds per ounce of gold, whereas 1 ounce of gold is worth 12 francs in French, right? So you see that gold price in two different countries. And deducing from the information given, 6 pounds must be equal to 12 francs, right? So immediately you can compute the exchange rate between these two currencies, right? 2 pounds for 2 francs for a pound, right? Exchange rate between the pound and the francs, it should be 2. And the question becomes, what if, right? In this kind of gold standard situation, right? What if this two currencies exchange rate slightly differs from what it has to be, okay? Then, for example, what if 1 pound becomes 1.8 francs, right? Francs, which means the pound price, the price of British pound get cheaper, okay? And then it will look like this. You see a triangular relation like this, right? Pound, gold, and French franc, right? 6 pounds for gold, 12 francs for ounce of the same amount of gold, right? Um, that stays the same, but somehow, for some whatever reason, the exchange rate between these two currencies slightly deviate. Then what happens? We see an arbitrage opportunity. Buy low, sell high. Okay. Now, nobody will try to, go this way because that will be more expensive. If you try to convert the what is it, the British pound into French franc using this depreciated rate, then you will have to spend a lot of more pound yourself than before. Okay. So what do? Bypass it over here. Okay. By buying gold and converting into francs, you can achieve the same amount of francs using less amount of pounds. Oh, good. Isn't it the way we do it with what? Bitcoin and US dollars and Korean won. We call it kimchi premium somehow. Wait a minute. That may be a little bit far away, but that kind of triangular arbitrage opportunity happens over here. Okay. So if you purely blinded mind, how do you say, empty-mindedly just to switch it into francs using this rate, you will have to spend 555 pounds, right, 0.56 pounds to convert it into 1,000 French francs. Okay. Instead, if you go this way, what do you have to do? You'll have to spend only 500 pounds to convert it into 1,000 French francs because think about this 6 pounds per ounce relation first, and then converting gold back into the converting gold into French francs, 12 francs, right? Yeah, per ounce. So if you do the math, you will realize you will only have to spend 500 pounds to get 1,000 French francs. Compared to this, you can save up to 55.56 pounds. Okay. So if you keep on doing this, what do? What's going to happen in the market? Where over time the price gap will disappear. Okay, arbitrage opportunity will disappear because pound supply will disappear. You go to you convert much of a British pound into gold, and the pound disappears. Okay, into the vault of Bank of England. It disappears in the market. The supply goes down, the price goes up. Whereas in France, Bank of France, you will see a France supply going up because it's the other way around. Okay. Now the French franc price relatively it will go down so that it will restore two exchange ratio between these two currencies. So that's gold standard approach. Okay, gold standard approach, well, proposed by this guy, David Hume. Highly stable exchange rates under the classical gold standard provided an environment that was conducive to international trade and investment. Misalignment of exchange rates and the international imbalances of payment were automatically corrected by the price specie flow mechanism. Okay, price specie flow. I don't know. Okay, is it correct pronunciation? Price specie, I guess. So, and I suppose Great Britain exports more to France than France imports from Great Britain. This cannot persist under gold standard because net export of goods from Great Britain to France will be accompanied by a net flow of gold from France to Great Britain. So more gold in Britain means that Britain will suffer from inflation more. And then for France, the other way around, it's deflation more, so that the economics impact will be happening. This flow of gold will lead to lower price level in France, and at the same time, a higher price level in Britain. As I said before, more inflation in Britain and deflation in France, because the gold position changes, right? And this is precisely what happened, in Spain and Portugal before, like 300 years ago or 400 years ago, where they uh, had a lot of flows they're flooded with gold from South America. Okay. Um. Anyway, but this story is happening through the exchanges, right? The trades over here. The resultant change in relative price level will slow exports from Great Britain and encourage exports from France. So it's like naturally balancing out. Okay. This mechanism was an automatic correction of payment imbalances between countries operating under gold standard. So based on the fact that domestic money stock rises or falls as the country experiences inflows or outflows of gold. Now, and then the key shortcomings of the gold standard is that um, deflationary pressure, okay, is there. Deflationary pressure because the supply of gold is limited. You remember Bitcoin? They said it is a deflationary currency because the supply of Bitcoin is limited to be 21 million coins, by the way. Okay. Um, and then the same thing. Gold supply is limited on Earth, right? In the end, you will have deflationary effect. Okay. Number two, there's no mechanism to compel each major country to abide by the rules of the game. France and Britain, you promise that you will convert or redeem your currency into gold. You promise. Why do I have to promise? There comes a time every 12 years. Right? I don't know whether it will be, must have been 12 years or not. I'm going to come back to you many times. Every whatever years, every recession time, every bad times, they will betray. They have to, because their general public will resent. Oh, you central bank, you're evil, greedy bankers. And then you, as a politician, you have to satisfy them. Okay, so, and then you go back to the other country and say, we will desert the gold standard thing. Okay, that happened in 1931, all the way up to 1936, before the World War II. Okay, which means if that kind of things happen again, we may have another World War. Okay, yeah, interwar period. Okay, so First World War ends the classical gold standard in August 1914. And then the major countries followed the sterilization of gold policy. Countries widely used predatory depreciations of their currencies as a means of gaining advantages in the world export market. Whenever the big recession, Great Depression kind of things happen, well, it's time for, how do you say, beggar thy neighbor policy. Beggar thy neighbor, beggar your neighbor. At the expense of you, we have to survive somehow. And then how do they do it? Well, by depreciating our own currency to get price competitiveness in the export market somehow. Okay. Every country was trying to do that. Eventually, some countries suffer more, some countries less. Here you see hyperinflation. This is added, this was triggered more by, how do you say, the aftermath of First World War, where they said the winning, how do you say, the British and then French forced the German government to repay a lot of damages, right, to the First World War, because they are the world war criminal. You pay a lot of this, and then eventually that created a tremendous stress to the government, and then the fiscal policy broke down, monetary policy together broke down. What did they do? Print a lot of money. Hyperinflation took place. In exchange for maybe a cake or something, of bread, they had to bring a lot of cash like that. Crazy amount. All right. Anyway, so that creates a lot of social unrest. In the end, you know what happened, right? Nazi Germany, they had to be there, right, in their own countries because of the people's distress, right, in their logic, their argument. Okay, did they have to? I don't agree, but somehow it just happens there. Yeah, and then um, and then countries widely use. Yeah, the periodic this period, right, inter-war period, and then until the end of Second World War, it is characterized by economic nationalism, half-hearted attempts and failure to restore the gold standard, economic and political instabilities and bank failures, and panicky flights of capital across borders. So yeah, bank runs, and then yeah, Bretton Woods system is essentially got established in 1945, and then it was in New Hampshire Bretton Woods, right? The purpose of meeting was to discuss the design of the post-war international monetary system, and described as a dollar-based gold exchange standard. Okay, dollar-based, right? What do you mean by that? Well, essentially, right? Essentially, as I said before, the United States is the only surviving superpower in the world. Was, right, at that time, because the Western European empires and then Japan, they were devastated so much, so that they needed some restoration effort, and then the only superpower, like 35% or 40% of world's GDP, was coming from the United States. So one single country taking over 35 to 40% of world GDP. Hard, difficult to imagine these days, because nowadays it's more diversified, and then the other countries grew so much. But that was the only savior. And basically, United States was not touched, I guess, not affected. Okay, in excluding Pearl Harbor, I guess, in Hawaii. So their production base and everything, the economy was very strong. So they were taking control. I mean, how do you say? They were volunteering, I guess, to recover this global market. Okay. How? Well, here's this structure. Here is the structure. Dollar-based gold standard. Okay, instead of changing different countries' currency into gold directly, Britain or Swiss changing into gold directly, you come to me, United States, right, and then change it into how do you say, U.S. dollar, and then the U.S. dollar you can switch it into gold. At what rate? $35 per ounce. Okay, fixed. Huh? And then the currency between US dollars and your currency, 1% range of change we allow it. Basically, it's going to be a fixed rate, but allowing 1% changes a little bit. Okay. And then redeeming it to gold only with the US currency, not your currency, not Swiss franc, those Spanish, what is it? Peso, right? Not Spanish peso or Norwegian krone or Finnish krone, is it right? What? Euro, I'm sorry. Before euro, what was that? Krona? Mark. Wow. Right. Good. So not those your own currency, but only for the US dollar, right? 35 fixed. Okay. Then what? Okay. The purpose of it was clear: to encourage global trade and economic growth worldwide, globalization. Let's live together happily, the capitalist world, right? So that we could, win the race against the communist world, right? So that was the idea. But in the end, it could not last forever. Okay, it could last forever. Triffin's dilemma was there, right? Professor Triffin of Yale said this, right? Well, reserve currency, right? If the United States want to keep the US dollar as a reserve currency, then you should run a balance of payment deficit in the end, okay? Because you have to print a lot of US dollars for other countries, which means you must have imported a lot of goods. Deficit has to run, okay? And for how long can you sustain that is an issue. At that 1945, maybe it looked very bright in the future, but not for 100 years or something, not forever. I guess they needed some kind of a, how do you say, timeline. 10 years or 20 years down the road, we're going to close it. But they didn't specify, I think, in that. And then the Triffin said, how could you run a balance of payment deficit and then, keep on this system? But this can decrease the confidence in your currency, US dollar, the people's investors' confidence on your US dollars will depreciate, okay? Eventually, US dollar value will depreciate, and then they will run for, how do you say, more for gold, and then you will have to redeem a lot of US dollars into gold, and then how can you sustain it? You will run out of gold reserve later on. The whole system will be broken down. Okay, that's Triffin's paradox or Triffin's dilemma. So what happened? Well, moreover, the U.S. government spent a lot of money in, Vietnamese War and 1971, like about 25 years, 26 years down the road. Okay, they had to abandon this system. Okay, the President Nixon said, we are not going to convert it into gold. Okay, which means essentially it's like a, how do you say, defaulting on this promise. And then if it was usual small countries defaulting on these promises, there could have been a war. And then the other empire countries will, try to bash it. And then, eventually a lot of conflicts might have happened, but it was United States, a superpower, and say, hey, we've done enough. Enough is enough. And then it was like, okay, what's next? Now the new world happened, so that the fixed exchange regime disappeared. Now let's get into floating exchange rate regime. Okay, more flexible exchange rate regime happened ever since 1973, and Jamaica Agreement, right? Yeah. And then essentially, because it is the US dollar is not redeemable into gold, from this time on, we say this is fiat currency period, fiat currency, fiat money. You must have heard about it before in your Bitcoin transaction. Those 전도사, how do you say? Bitcoin 전도사. All those Bitcoin the protagonist will always say, how the Bretton Woods system sucks. And then, given that this money is a fiat currency, and then here's great things about the Bitcoin, so buy it. This is the future currency, blah, blah, blah. What do you mean by fiat currency? You may question. But the thing is, I looked for this origin of this term, and seems like it comes from the Bible. Okay, if you look at the creation, okay, and it says what? When the God created the world, and God said, "Let there be light," and the light was there. Okay, it's like fiat lux. It's like a let there be light. Okay, it's like a out of nowhere. You just claim it, and then here's light, and you see light. Oh, light. It's like a fiat money. What is it? The central bank says, here's money. And you have to believe, oh, there's money. Instead of, here's $35. Oh, because there's a 1 ounce of gold, that's a money. No, 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 no. No money. And I say money. And you say, yes, sir. Money, I believe in you. We trust in central bank. Yeah, so that's based on the trust of the bank, central bank. We believe in that claim. That's a fiat money concept, okay? Yeah. And then non-oil exporting countries and less developed countries were given greater access to IMF funds. We're going to talk about this IMF reserve a little later. But the thing is, one more thing about it is, well, petrodollar, okay? Now the US government almost defaulted on their promise, so that they lost the confidence. But how could they grab more power about the world economy, okay? Because being a reserve currency even more, right? Is a big, interesting question. And related to that issue, I would like to draw your attention to this term, petrodollar. Petrodollar. What is it? Petrodollar. Petrodollar. Anybody? Anybody? Until next week, maybe you could delve deeper into this one, petrodollar, and talk about the current issues, because it is related to what happened between, what is it, the President Biden and then the MBS, right, of Saudi Arabia. Okay, so go ahead and look at it, and then what's the hot issue popping up, and China especially. Okay, the war between China and the United States. What is it? Okay, talk about it and think about it. Now, what you see over here, this is a trade-weighted value of the US dollar since 1964. If you look at the note, the small fine print over here in Exhibit 2.3 in your textbook, says the value of the US dollar represents the nominal exchange rate index, 2010 value being 100, with the weights derived from trade among 27 industrialized countries. Okay, so the value of US dollars relative to other currencies in 2010, that's this part, global financial crisis right after that, that's 100 over here. All the index, usually we set it as 100. Okay, that's a benchmark point. And then if you look at the, this tells us a lot about the strength of US dollars, okay, relative to other currencies. And you look at this point, of course, no wonder right after global financial crisis, the US economy strength was very weak. So that it was on the one of the lowest low point, okay, 100. If you set it that way, if you look back, then the strength of US dollar was tremendously bigger over here in 1980s, around the time of Plaza Agreement, and then the collapse of Bretton Woods, right? I told you Bretton Woods collapse of Nixon's, the right, Smithsonian event, right? That was kind of a default on kind of a virtual default in the US, and then the strength weakened over here. You can see that, and then it revived back again. Okay, Jamaica Agreement, right? Things like that, and then that concept is close to what we call US dollar index over here. If you go to investing.com, nowadays you can look for dollar index, okay, US dollar index, and then bring a chart like this. Over a maximum period, I pulled it out, and then it comes, it starts from the 1990s somehow. Unfortunately, it does not fully cover until 1970s, compared to the picture before over here. 1960s, oh my God, yeah. So that graph starts from over here, okay? Over here. Now, this index is based on, 100 part, 100 value is set in other point of time, okay? Based on that dollar index chart that we see, nowadays the index value is 109 today, 109.48. I told you before, the foreign exchange rate of Korea skyrocketed, okay, or depreciated like crazy so far, which means the US dollar's value increased like crazy. How about other currencies? On average, US dollar got stronger recently. You can see this part, right? Now the question is, how strong will the US dollar be going into the future? Okay, how strong? We don't know. We don't know. But where would it go? Where would it go is the next question. For that part, I thought we need to look at this graph And then think about a similar situation as today. We are worrying about the stagflation, something called stagnation of the economy, slowing down, plus the inflation. That was what they suffered in 1970s and 80s, this period of time. Okay? This period of time. So for that part, you see the number over here is like 140 or even more, right? But how does that compare with the dollar index today? Okay? Put the first picture into the perspective of with respect to the second picture. Okay? Put this guy into the perspective of this guy. How can we convert it? Is the next question. And I want some volunteers for this. Here, US dollar index value is 109.48. 2010 value, okay, was 86.3 based on this one. You see it over here, 86.3. But in the chart before that point, what is 86.3 by this is 100 over here, is 100, this part, okay? So if that is the case, what about this part? This guy will translate into how much in the US dollar index value today is the question. Anybody? I give you 5 minutes to calculate this one, or 3 minutes to 5 minutes. Somebody do the numbers and then come back to, tell me about this. So this will tell us, the answer to this one may tell us that where the US dollar will go, okay? Again, based on today's US dollar index, okay, 2010 October value was 86.3. But that 86.3, we can say that that was 100 in this chart over here. Okay? If that is the case, what is the US dollar value if it goes to 140 like this in 1970s and 80s like this, right? So tell me the number, please. further than that. Okay. So that's the thing. Okay. Thank you. Current exchange rate arrangements. Yeah, and then different countries have different FX arrangements, regulations, as you said, right? Some countries go for floating exchange rate, leave it to the market, let it flow, let it go, let it go. Okay. Um, some countries go for other arrangements, right? Peg to US dollars and then things like that. Um, and then a lot of different ways of doing it. You can look at it in the table, on the in the textbook, right? To have some rough idea about it, yeah, would be good. Okay, free floating is what we are experiencing right now. Okay, right, and then currency boards for Hong Kong dollars and US dollars, right, like that. And then another example of currency board is that Brunei versus Singapore, okay, where I worked before. Singapore is over here. At the end of Malay Peninsula, one small city over here, country. And then the Brunei is over here, right? And then they, have an agreement. $1 for $1 in two different countries' currency. They're pegging each other like that. Okay. And then another surprising fact about Singapore and then Brunei is that they used to have the currency unit of 10,000 Sing dollars. How much is that? Well, about 1,000만 won or 7,000 US dollars worth. One single piece of paper, 7,100 US dollars worth. Give it to you. Give it. And there's no trace that, no evidence that I gave it to you or you. Okay? It's a good way of carrying, right? A lot of black money. It used to be like that. Nowadays, they scrapped it, and then they're trying to reduce the currency, the paper over here somehow. Okay. Yeah. So that's that. And then European monetary system, yes, started with European Coal and Steel Community, ECSC 1951. But why coal and steel? You may question, okay? What does it have to do with the euro? And here's my way of interpretation, because steel and coal, they combine it together, okay? Steel mine and coal mine, if you have those things together, and you can have a lot of industrial powers going up, okay? The Germany had a lot of coal mines, right? Whereas the France in the borderline, they had Alsace-Lorraine, the iron ore territory, the mountains or the how do you say, the clays are red color because it has a lot of iron component in it. I've been there in Colmar over here. Very, very beautiful city, town. And then there was a part where both empires tried to snatch from each other like crazy. If you look at the novel by Alphonse Daudet, 별, and then 마지막 is like a last class, Alphonse Daudet. I don't know how to pronounce that guy's novelist name, but that is about this area where they fought and they snatched from the other country and snatched from the other country, like back and forth, back and forth. Eventually, the Second World War, until the Hitler was snatching away, they are fighting for this territory to establish their empires stronger. Now, after the World War II, what do they say? Let's take it as a symbolic place. Maybe we could combine our force together instead of fighting against each other. Okay, let's create some meaningful place. First of all, community of coal and steel, ECSC. And second, European Parliament. Where is it located? Strasbourg, Colmar, nearby. Very beautiful. And then their effort, you see the European Parliament over here, okay? their efforts took place ever since 1950s, and then it developed into combined the European monetary system. Okay, and then a lot of effort was to stabilize this the zone of monetary stability to for economic recovery and development, right? And then yeah, so the textbook tells a lot of great stories about the European Monetary Union taking place, and then combining those unified market going on together, right? Um, yeah, didn't Asia have the same effort? Or every time we look at this European Union's effort, right? We always wonder, what if we had China, Japan, and Korea, or maybe other countries going into, uh, maybe Central Asia and then Malaysia? What if we had some kind of currency union like that? Okay, instead of fighting against each other, but we don't have that awareness. Okay, we did not. I don't know. Like did not have that kind of experience so far, unfortunately. Number two, European Union maybe politically, or it could have been more possible because if you look at the Elizabeth, the late Queen Elizabeth III, right? Her family, it's like the royal family is spread out in Europe, isn't it? The Habsburg king's family, and then the British Empire, and then the Bourbon Empire. Smaller families were spread out so that they were politically controlling them, so that they could be thinking of easier to think about combinations somehow. Number two is the banking network. All different countries, the banking network was there, and they could exchange their ideas and money together. That was more doable. In contrast, in Asia, no, no. It's like basically we're like whole country. Japan is there independently. They were having their own empire. Korea, we had our own country, kingdom over here. China is a huge continent. It's like 1.4 billion people. Okay, difficult to think about adding any more countries in it. No. And then the empire-wise, the exchanging of the royal family, no way, no way. Um, Taiwan, Thailand, and other countries, they had their own kingdoms like that. So it's very different situation in Asia. But European economy was combined like this, like that. Dollar to euro exchange rate has been fluctuating. Nowadays, it's below 1. Okay, is that right? Yeah. And then the currency exchange rate changes, volatile. We call it, I mean, sometimes there are periods of extreme volatility, and sometimes a very tranquil period is there. Yeah. Nowadays, we are experiencing another turbulent times. Yeah, and then the history of euro is there, right? Euro system, yeah, ECB, central banks, and then the central bank's tasks include, right, defining and implementing the common monetary policy of the union, and conducting foreign exchange operations, and holding and managing official foreign reserves of euro member states, like that. But benefits and cost has been there, and then people have been focusing much more on the benefits in textbook. Okay, reduce the transaction cost among these different countries so that you could trade a lot more, and then develop your economy in more stable manner. An elimination of exchange rate uncertainty and exchange efficiency, and enhance the efficiency and competitiveness of European economy. And then conditions conducive to the development of continental capital market with more depth, and liquidity. Okay, and political cooperation and peace in Europe was their aim. Yeah, the main cost was what? The loss of national monetary and exchange rate policy independence, because you see, we've been experiencing that over the last decade, right? Greek and then Pig's country crisis have been telling a lot about it. And then that's the reason why I crossed out these words in the notes. Okay. Euro proves successful. It will advance the political integration of Europe in a major way, making a United States of Europe feasible. Seems like we have to adjust that part. Okay. Brexit was there. Nowadays, what? The Northern Ireland or Scotland? Maybe Scotland not, but Northern Ireland maybe maybe having a different opinion about Brexit, maybe disintegrate into different parts. What will happen? We don't know. Okay. Yeah. The euro and the US dollar would be the two major currencies. We people said that before. Anyway, ECB in Frankfurt. Yeah, we visited there, so I took this picture before. These ones, right? Frankfurt, yeah, great city, great financial city. But we had a lot more fun in Berlin. Frankfurt was more of a business center, I would say. And as it turns out, the Rothschild family started from Frankfurt. Okay, but historical places not much celebrated yet. Anyway, the fixed exchange rate to flexible exchange rate is associated with a lot of currency crises around the world. That part, we're going to discuss it here, and then together with it, Chinese yuan issues and fixed exchange, because Chinese yuan, they stick to kind of a fixed exchange rate, more controlled exchange rate regime. They will the textbook discuss more about the benefit of having floating exchange rate instead of fixed ones. Okay. So that's the last part of the chapter. Okay, currency crisis. Well, until now, three major currency crises they discuss in the textbook. One is Mexican peso crisis. Two is the Asian currency crisis, and three is Argentine peso crisis, respectively. And as it turns out, Mexican peso crisis was a hot issue when I was an exchange student at Brown University in 1994 to 5, exactly that time. Okay, I don't know what the heck was happening there, but it was a very, very hotly debated in the class. Of course, I was very busy partying, so but had a lot of fun in America. But that was a hot issue, not knowing that that issue will bother our country 3 years down the road. Okay, and then 3 years after, 5 years after, right? Argentina suffered another one. What is the issue? Okay. For Mexican peso crisis, there was NAFTA agreement. Okay, Mexico, United States, and Canada, North America. Let's have a free trade zone, just like Europe. Yeah, let's follow them. And then Mexican government had expansionary policy for the election. Always the politics is an issue. Populist government. Irresponsibility takes place somehow, and somebody has to take care of that mess, right? That is an issue. The budget deficit, okay? Now the Mexican Treasury issued a short-term debt denominated in peso with a guaranteed repayment in US dollar. Yeah, you don't want to guarantee anything about repaying into different countries' currency unit, because you never know what's going to happen in your floating exchange rate regime, and that, all of a sudden may screw you. So have to be careful. And then with NAFTA and then this kind of policies, they attracted a lot of foreign investors. And then the assassination of presidential candidate and the increased political uncertainty was a problem. And that increased uncertainty, risk, requires a lot of risk premium. Interest rate goes up, right? And the Treasury issued US dollar denominated bonds to buy pesos to sustain the peg of peso to US dollars. So the peso was, there was a high value, too much high value for a peso was there. And then with that, import increased, and then the deficit increased, and then it was unsustainable, okay, to keep this peso overvalued like that. The central bank eventually buys more peso and depleted US dollar reserves. And then eventually at the end of 1994, the Mexican government announced the plan to devalue the peso against the dollar by 14%. Like 1 percentage point change in the FX market is a big thing, but 14% in a whole day, that's a crisis, we call it, right? Eventually you have to meet the reality is the issue, okay? Artificially appreciated currency value, meeting the reality crashes. And then this decision caused the peso as well as Mexican stock and bonds to be sold rapidly. And by early January 1995, the peso had fallen against the US dollar by as much as 40%, yeah, forcing the Mexican government to float the peso and belly up, yeah. And the peso crisis rapidly spilled over to other Latin American and Asian financial markets. There's a ripple effect coming up, okay? Yeah, you see the value of peso, right? It was artificially high, and then eventually we cannot keep it this way, as the deficit is too big, so let's float it. Float it down, yeah, that's the thing. So that's what happened. Mexican peso crisis is unique in that it represents the first serious international financial crisis touched off by cross-border flight of portfolio capital. Okay, short-term investors, international capital, they were moving fastly, so they had, they suffered it. Two lessons. One, it is essential to have a multinational safety net in place to safeguard the world financial system from such crisis. Mexico excessively, number two, Mexico excessively depended on the foreign portfolio capital in financial economic development, when a higher priority should have been placed on saving domestically. So, right, multinational safety net, well, IMF, right, kind of organization has to be more rigorous, right, in working out for this one. Number two is like the debt, right? Foreign if you look at the capital investment, right? We have to be careful about the foreign debt that you owe, okay? As opposed to domestic debt. Japan comes close to this. I mean, not comes close, but is a nice contrast. Japan, the debt level relative to GDP is huge, like 2 times or something. Huge amount of debt is there. But when it comes to Japan, their debt, they owe so much things more to domestic investors as opposed to foreign investors. So their obligation is not that heavy. Okay, they can print their money out. Okay, maybe they will create their hyperinflation and then screw themselves, but not to the level of going to international default and asking for help in IMF. No, right? So that's the difference, right? Another thing that we have to look at when we talk about, are we facing another crisis, right? FX rate, we try to answer those questions. One of the things that we have to think about is foreign debt. How much do we owe, okay, compared to the GDP or things like that, okay? That's the part. Asian currency crisis is the next one, far more serious than the crisis of the EMS and the Mexican peso in terms of the extent of the contagion and the severity of the resultant economic and the social cost. Yeah, 1997, yeah, and 8, right? Many firms, okay, and it led to an unprecedentedly deep and widespread and long-standing recession in East Asia, a region that has enjoyed the most rapidly growing economy in the world over the last few decades, few decades. So basically, here's what happened. Asian currency value relative to US dollar, okay? Yeah, we have the textbook shows Korean won over here and Thai baht and Indonesian rupiah. Anybody from Indonesia over here? No? We have one student from Malaysia. and Malaysian ringgit must have been over here together with this. And then we had a lot of, I mean, we have a friend from Thailand, right? So Thai baht value, yeah, we were in the same boat, right? Somebody was going faster and somebody was following later. It's like a what? How do you say? The roller coaster together. Somebody going out down to first, and then we are in the later part going down together, and then we are in the same roller coaster, right? Like this. So here's what happened. Um, right. Capital markets were opened, and the large inflows of private capital resulted in a credit boom in East Asian countries. Fixed or stable exchange rates also encouraged the unhedged financial transactions, and the excessive risk taking by both borrowers and lenders were there. I mean, easy money is the first problem. Easy money. At this part, right? At this period, for Korean companies, for example, we had easy borrowings for big corporations, 재벌 companies like Samsung, and then LG, you name it, SK or whatever big corporations, the 재벌 groups. As long as you have strong relation with the central government, okay? Maybe your daughter married to the son of the president, or the son of the other high level government officials. You are in a special relation, and you will get easy money as bank debt. Okay, bank debt. You can go to any 국민 bank, your Samsung, or maybe I should not say I should stop picking on Samsung. Maybe LG, and go to your bank, 국민 bank, KB bank, and then give me money. Easily borrowing. Okay, so that the debt to equity ratio in a book value terms, okay, was amazing. Nowadays, how much? You have a balance sheet over here. BS. It's not bullshit. It's a balance sheet. Thank you. On this side, you have what? Asset. Here you have what? Liabilities. And then maybe you could say a debt if you focus more on the borrowing part of it. Debt and equity. What's the typical ratio of debt to equity in terms of book value? Not market cap, but for book value. What to what? Nowadays, what is it like in Korean companies? Any CPA? Raise your hand, please. This is time to pick you on. You're the CPA. Tell me, on average, what would it be? You have some ideas? 100%. So debt or equity is 1 to 1. 100%, right? 1 to 1, roughly. Okay. In the US, how much would it be, roughly? Do you know some idea? No correct answer. I don't know either. In the US, it's like usually 0.2 to 1 or something. Okay. In Korea, maybe 1 or 1 to 1, kind of, but that's not comparable to what it used to be. When I was in your age, okay, in college, 1996, I looked at, Samsung's balance sheet, Hyundai Daewoo balance sheet. The debt to equity ratio was like, what? 8 to 1. It's like a bank. It's like a bank, right? But they are car manufacturers, right? And surprisingly, how could they borrow so much money like this? A crazy amount of easy money, easy credit. Why? Because it was deeply protected by the government. Okay? And then the special relation, crony capitalism, we say it. Okay? Oh, I have a special relation with the 검사님. That's partly why our education system in Korea has been so much focused on 고시 thing, right? Or the training you guys to be more government officials. Because once you have a special relation, the world is your oyster. you will live an easy life everywhere. That was like the 80s and until 90s. 8 times debt and equity 1, or 5 to 1, and things like that. Heavily leveraged position, even in the manufacturing. Samsung had a motor car company, right? Because Lee Gun-hee, the president, his hobby was, racing car, yeah, like that. Um, that the leverage ratio. Eventually, they filed for kind of trouble. A lot of bankruptcies happened. And number 2 biggest corporation called Daewoo Group, the whole 재벌 group of Daewoo fell down. They did not got bailed out. The other companies got bailed out. Another part of it was with this easy money, what did they do? Not only invested in risky business, but also risky business domestically, but also invest in other countries. That was when, smartest guys moved, got a job in those investment banks, 종금사, 종합금융사 kind of things in Korea. And their financial investment banks in Korea, they heavily invested in Southeast Asian countries. And then with easy credit, so much. The thing is, they had a huge position in Southeast Asia and in economy. And then eventually the currency crisis took place. Thai baht going down, Malaysian ringgit, is it right? Again, going down, Indonesian rupee going down, all the things going down together. And then Korean banks were going down together with it. And then the several corporations also got down together. So easy credit was the centerpiece of this problem. And as it turns out, that kind of easy credit comes every 12 years, you said, right? Maybe, depending on the regime, okay? Fixed versus exchange, stable exchange rates also encouraged the unhedged financial transactions and excessive risk-taking. That was a heyday. $1 was equivalent to 800 Korean won or something. 800. Can you imagine that? I never knew we were living in such a happy era. Right. Nowadays, it's like 2 times or something. Crazy. Yeah. Also, Japan's long-lasting recession, Japanese yen, right? After the Plaza Accord and then not the Plaza Accord, early 1990s, right? Japanese economy suffered from huge burst or crash of the real estate market. Okay, 1993 or something. And then with that, they had to lower down the Japanese yen rate, interest rate. So we call it Watanabe 부인들, like Mrs. Watanabe, money from Mrs. Watanabe. What do you mean? Well, go to Japan and then borrow money at extremely lower rate, 0% or even minus, right? And then what do? With that Japanese yen, convert it into Korean won or Malaysian ringgit and invest in those countries, earning better interest rate. And then later on, you convert it back, get the money back, and then pay back to the Japanese bank, okay? So that's carry trade going on, was happening at that time, adding to those easy monies, right? Yeah. And then East Asian currencies had been allowed to depreciate in real terms, right? Eventually, one by one, we had to meet the reality with the floating exchange rate coming up, and eventually some had to give it as Thai baht. Yeah, collapsing happened, panic happened, right? So eventually, this kind of moving away from fixed exchange rate and then floating exchange rate, we face this kind of incompatible trinity, okay? Incompatible trinity. Here's the Korean translation of it. Yeah, the fixed but adjustable exchange rate is problematic in the face of integrated international financial markets. Now, the 3 things, right? Independent monetary policy in your country, having it together with fixed exchange rate. Okay, having these 2 things together may be possible. Okay, your treasury and then the central bank have independent monetary policy as opposed to other countries, and you still have fixed exchange rate, okay, against other currencies, may be doable. But if that is the case, forget about the free international capital flow. Okay, um, you may have independent monetary policy in your country, and then you can pursue for free international capital flow. But if that is the case, you have to forget about the fixed exchange rate. You need floating exchange rate. Otherwise, the international capital flow will not happen. And then likewise, you can only have two of them, not three of them at the same time. So flexible exchange rates and independent monetary policy, and then free international capital flow. Those are something we cannot satisfy simultaneously at the same time. Okay, that's the hard part of international money market. Okay. Argentine peso crisis, the third one the textbook discusses. And then, right, in 2002, right, in February, the Argentine government passed a convertibility law linking the peso into the United States dollar at parity and pegged to US dollar, right? Dollarization. The initial economic effects were positive. Argentina's chronic inflation was curtailed dramatically, and foreign investment began to pour in, leading to an economic boom. And peso appreciated against most currencies as the US dollar became increasingly stronger in the second half of the 1990s. And then the strong peso hurt exports from Argentina. Artificially higher, value of your currency doesn't help your trades, right? And caused a protracted economic downturn that led to the abandonment of peso dollar parity in January 2002. Meeting the reality means what? Floating down in your currency. This change caused severe economic and political distress in the country. The unemployment rate rose above 20%. Inflation rate reached a monthly rate of 20%. Yeah, so this is what happened, right? Peso per US dollars, right? So there are at least three factors that are related to the collapse in the currency board arrangements and ensuing economic crisis, lack of fiscal discipline, and labor market inflexibility, and contagion from the financial crashes in Brazil and Russia. So contagion effect was big as well over there. Fiscal discipline is an issue the IMF frequently addresses, but that is that related to this. And then East Asian crisis, you will have a end of chapter mini case later on, so that's going to be an interesting part. The next part is about Chinese renminbi, but we are about time. Okay, it's about time already. But next week we're going to finish this part and then hope to finish chapter 3. Okay, so next week, who is going to be the chapter 2 mini case presenters? Please raise your hand. Yes, don't forget. Okay, and then the current issues, right? Volunteers, I'm looking for it. And then you may send your email to me again, telling your preference, week number, what you want to do it, so that I could prioritize you guys based on first come, first serve basis. Okay, great. Thank you. And then see you again next week. All right. Bye-bye.
안녕하세요. 네, 안녕하세요.